Consumption has been one of the biggest growth engine of our country for last many decades. Although there were challenges in last few years due to weak rural demand and higher inflation. But now both RBI and Indian government are trying to boost the consumption engine of our country. And one sector that could be the next big beneficiary of this consumption comeback is India's dairy sector. See, India is already the largest producer and consumer of milk in the world. But what is changing now is how Indians are consuming dairy. We are moving rapidly from loose, unbranded milk to packaged, branded dairy products like milk, curd, paneer, ghee, cheese, yogurt, and even protein-based drinks. And just when this formulation trend was already gaining momentum, the government made a big move. On 22nd September, the GST on most dairy items was cut to 0 to 5%. Now this may look like a small policy tweak, but for the organized dairy sector, it can be a potential game changer because lower GST makes branded dairy cheaper and far more competitive against the local unorganized players. And every 5 to 10% price difference in this segment can trigger massive volume growth as consumers shift from loose milk to packaged branded milk. That's where today's video will deep dive into Indian dairy sector, where we'll cover the key growth drivers for the industry, then we'll discuss the industry structure and key listed player in India. We'll also do a quick comparative analysis of top listed players to identify the most promising company. And then finally we'll look at the key risk in growth thesis. Alright, let's get started. So first key growth driver is rising consumer demand. India's dairy industry is not just about producing most milk in the world. It's about consumption trend shifting rapidly, especially in urban and semi-urban market. Urban households are moving away from loose milk and traditional local dairy. Instead, they want packaged, safe and branded milk. This has created steady demand for organized dairy players of India. Second driver is shift towards value-added products. This is one of the biggest growth driver for dairy sector in India. Consumers are not just drinking milk anymore. They are buying curds and yogurt for their dairy protein and probiotic, paneer and cheese for convenience and restaurant-style cooking at home, flavored milk as ready-to-drink option, ghee and butter for traditional cuisine and so on. These VAPs are growing 1.5 to 2 times faster than liquid milk. Then third growth driver is health and protein consciousness. Today, India's rising health conscious people are not just looking at milk or curd anymore. They are increasingly looking for convenient high protein options to meet daily requirement of their protein. It includes categories like protein powder and shakes like your whey protein, casein, plant berry blend, then fortified milk and flavored milk enriched with protein for school kids and fitness enthusiasts, then probiotic yogurt for gut health, then ready to drink protein beverages for gym goers and busy urban professionals. Then paneer cheese with high protein content are marketed as protein rich snacks. This is the fastest growing category in dairy sector. Also, this segment has very high margin unlike the traditional dairy products. Basically, today dairy products are not just about breakfast or cooking, they are also about snack, fitness drinks and meal replacements. Then fourth driver is convenience and modern retail. Today, e-commerce, supermarket and hypermarket are making branded dairy more accessible. Refrigerated home delivery is gaining traction even in tier 2 and 3 cities. It expands the reach for private players and reduces dependence on traditional wet markets. And then fifth driver is GST rationalization. On 22nd September, Indian government made some major changes in GST where most dairy items now either attract nil GST or 5% GST. See, India's dairy market is still 60 to 65% unorganized where people buy loose milk from local vendor. So when GST comes down, branded products get cheaper and that pushes consumer to shift from unbranded to packaged milk, paneer and curd. That's formalization. And that's exactly how long-term value creation happens. Also, this milk category is price sensitive. A 5 to 10% price cut can drive 8 to 10% volume growth. This GST rate cut has already resulted in sharp increase in demand for auto sector and I'm closely tracking many companies that can benefit from GST cut. It's part of my exclusive weekly video series where I cover more than 200 quarter results and identify investment opportunity. Now that we are already in Q2 result season, it would be interesting to identify new investment opportunities. But let me clarify that the idea behind this series is not to give buy or sell call. The idea is to empower you with the right information and knowledge so that you can build your own thought process to invest in right companies. For more details, you can explore my website or join button on my YouTube channel. Okay, moving on, dairy sector in India has a structural tailwind driven by urbanization, health consciousness, convenience, premiumization, and now the GST rate cut push. Now let us look at the industry structure and then key listed players in Indian dairy sector. If you look at the overall Indian dairy industry, around 60 to 65% of India's milk still moves through unorganized channels that include local milkmen, small aggregators and village level suppliers. Remaining 35 to 40% is handled by organized players. Now within organized players, there are two business models driving India's milk economy. First is the cooperative model and second is the private organized model. Cooperative model include players like Amul, that is India's largest dairy cooperative and a dominant food company. Apart from this, you have Nandini, that has a strong presence in South India. Saras is very popular in Rajasthan. In this model, farmers pour their milk at small collection center called village societies. This milk is tested for quality, weighted and recorded. From there, it goes to the district union where it is processed and packaged. And finally, state level federation like Amul in Gujarat or Nandini in Karnataka handles the branding, marketing and nationwide distribution. So effectively, it's a three-tier network that connects millions of small farmers to urban consumers. Now let's talk about the private organized model. So unlike cooperatives that are built around farmer ownership, private dairy operates as for-profit enterprises. And unlike the cooperative companies like Amul that are not listed on Indian market, we have some leading private players that are listed on Indian stock market. Let's have a look at some of these companies. So there are broadly four key listed players in Indian dairy sector. First in Hatsun Agro. Founded in 1970, Hatsun today is the largest private dairy company in India by revenue. It operates across the entire dairy spectrum from fresh milk to value-added products like curd, ghee, ice cream, paneer, etc. Plus, it owns a chain of ice cream parlor under the name Ibaco with more than 150 outlets. Hatsun real moat lies in its deep rural procurement network and cold chain infrastructure. It collects milk from more than 4 lakh farmers daily through more than 13,000 village collection center and operates more than 20 manufacturing plants across South India. It has a distribution reach spanning over 40,000 retail outlets and a strong presence in rural and semi-urban market. Its core market are Tamil Nadu, Andhra Pradesh, Karnataka, Telangana. It also exports to Middle East, Sri Lanka and Singapore. Company's earning in last 10 and 5 years is very good, but it has reduced in last 3 years and has degrown in trailing 12 months. As a result, its share price has been underperforming in last 4 years. However, now its market cap to sale has fallen significantly and so is the EV to EBITDA and PE ratio. Then second company is Dodla Dairy. Founded in 1995, Dodla Dairy has quietly built a strong profitable presence in India's southern dairy market. Its product range includes liquid milk sold under Dodla Dairy brand along with range of value-added products like curd, ghee, paneer, cheese, buttermilk, lassi, flavored milk, ice cream and milk-based sweets. In FY25, company's 75% revenue has come from milk and remaining from value-added product. Please note that contribution of value-added product in overall business is growing at a good rate. Company sources milk directly from over more than 1.1 lakh farmers daily and sells through over 650 distributor and 40 plus depot, reaching more than 40,000 plus retail outlet. It has presence in 11 Indian states with a strong base in Andhra, Telangana, Karnataka and Tamil Nadu. Plus also company generate 10% revenue from export to Uganda and Kenya through its African subsidiary. Recently, Dodla has acquired Awesome Dairy for 271 crore. Interestingly, Awesome did a sale of 282 crore in FY25. So the acquisition is at a price to sale of less than 1. With this, Dodla gets an entry into the Eastern Indian market. Awesome generates 72% business from milk and remaining from VAP. Company's profit growth has been fantastic in last 5 years and even in trailing 12 months, both revenue and profit growth is excellent. As a result, its share price has outperformed in last 3 years. Although there is a decent consolidation in last 1 year. Third company in the list is Heritage Food. Founded in 1992, Heritage offers a wide range of dairy products under its flagship Heritage brand. Its liquid milk contributes around 75% of revenue and remaining comes from value-added products like curd, paneer, butter, ghee, lassi and ice cream. They also have launched new products like yogurt, sweets and flavored milk. Company is a network of 3 lakh plus farmers across 9 states with a daily procurement of 1.8 million litre milk per day. It has a distribution reach spanning over 7,400 distributors with more than 2 lakh retail outlets. If we look at revenue breakup of milk versus VAP, in FY24, VAP contributed 26% in the business. In FY25, it increased to 32%. In last 5 to 10 years, company's revenue growth has been in single digit, but its earning growth is more than 20%. In trailing 12 months, Profit growth has slightly reduced but is still very good. Its share price jumped a lot between 22 to 24 phase, but then it corrected sharply. However, there's a good recovery now. Then fourth company is Parag Milk Food. Founded in 1992, Parag Milk owns the popular Govardhan brand that offers milk, ghee, cheese, paneer, yogurt and flavored milk. One very interesting aspect of Parag Milk Food is their entry into the whey protein business under the brand name Avatar. And recently they have launched protein bars. They have categorized this business under new age category. Interestingly, for Parag Milk, the contribution from milk is very low at 10%. The value-added products like ghee, cheese, paneer that they categorize into core business contributed 57% in revenue. Other VAP contributed another 10%. Their new age segment contribution is 9% at the moment, but in last 3 years, this new age business has grown at 39% CAGR. Core category growth is 18% and other VAP growth is also impressive at 39% CAGR. Parag Milk has a network of more than 4,500 distributors and 4.6 lakh pan-India retail outlet. Company's revenue and net profit growth in 5 years is low, but the same growth in last 3 years is fantastic. This got reflected in share price as well, with more than 2 times growth in last 3 years. Now let's have a quick look at comparison of these 4 companies across important financial KPIs. So this is the business comparison of top 4 listed companies in Indian dairy sector. Hatsun, founded in 1970, rest all were founded in 1990s. If you look at the core geography, Hatsun, Dodla and Heritage, they all have strong presence in South India, and Parag Milk has strong presence in West and North India. Then if you look at the VAP mix, that is value-added product, Hatsun Agro has 30 to 35% contribution from VAP, Dodla Dairy 25 to 30%, Heritage Food 25% and Parag Milk contribution is 65 to 70%. If you look at the distribution reach, Parag Milk has got the highest reach. Then if you look at the business focus, your Hatsun focuses on scale and efficiency, Dodla is margin discipline, Heritage is steady growth and Parag Milk is brand and premiumization. If you look at export presence, Hatsun has some export presence in Asia and Middle East, Dodla is presence in Africa, Heritage presence outside India is limited and Parag Milk has presence in 25 countries. If you look at key strength, Hatsun's strength is scale and rural network, Dodla's strength is operational efficiency, Heritage strength is brand trust and legacy and Parag Milk's strength is high value branded portfolio. Then if you look at key challenges, Hatsun challenges regional dependence, Dodla challenges limited pricing, Heritage challenges margin pressure and Parag Milk challenges high marketing and working capital needs. Now here is the financial comparison of all 4 players. In terms of FY25 revenue, Hatsun has highest revenue followed with Heritage, then Dodla and Parag Milk. Net profit wise, again Hatsun has highest followed with Dodla and then Heritage and then Parag. If you look at the growth in last 5 years for revenue, Dodla is highest growth. Then as far as profit is concerned, again Dodla is highest 39% CAGR growth in last 5 years followed with Heritage Food. If you look at trailing 12-month revenue growth, Dodla is highest again with 19% followed with Parag Milk, and if you look at trailing 12-month profit growth, Dodla is again highest followed with Parag Milk. If you look at the margin, Hatsun Agro is highest margin followed with Dodla, and if you look at ROE and ROCE, again in terms of ROE, Dodla and Heritage are leader, and in terms of ROCE, again your Dodla and Heritage are leader. In terms of debt to equity, Dodla is almost debt free followed with Heritage with slight debt. Parag Milk is again comfortable, Hatsun has higher debt. If you look at market cap, Hatsun is highest followed with Dodla and then Heritage and then Parag. In terms of valuation, we are using 3 parameter, price to sale, EV to EBITDA and PE ratio. Price to sale wise, Parag Milk is cheapest followed with Heritage and then Dodla. In terms of EV to EBITDA, Parag is again cheapest followed with Heritage and then Dodla. And if you look at PE ratio, again Dodla, Heritage and Parag are at par, whereas Hatsun Agro PE is high. As far as promoter stake is concerned, all 4 have decent stake. Hatsun has highest followed with Dodla. But as far as institutional investment is concerned, they are more bullish on Dodla with highest 30.4% exposure followed with Parag Milk with 16% exposure. So far we have discussed the key growth drivers for dairy sector and key players in the industry. Now let's have a look at the final part, that is key risk in the growth thesis. On the surface, the dairy sector looks very stable. People will always drink milk, right? But when you look deeper, especially for private players like Hatsun, Dodla, Heritage or Parag, there are some serious challenges that make this business a lot tougher than it looks. First risk is intense price competition from cooperatives. Indian private dairy sector faces intense competition from cooperatives like Amul, Nandini that can afford lower pricing or delayed price hikes. Please note that the dairy sector is not a very high margin business. Private dairies operate in single digit EBITDA margin, so even a small price war can hurt profitability. And that's where the industry is trying to move towards higher margin value added products. Second risk is dependence on raw milk procurement. See, milk procurement is the lifeblood of this business. It makes up almost 70% of total cost. And here's the problem. Milk prices depend on things no company can control: weather, fodder inflation, and competition from local cooperative. So even a small increase in procurement cost can completely squeeze the margin. Third risk is slow transition to value-added products. Everyone says that focus on VAPs like cheese, yogurt, paneer, protein shake. Yes, margins are better here, but brand building and distribution are expensive. Most companies still get 70 to 80% of revenue from plain milk and ghee that are low margin and price sensitive business. So the journey from volume to value is much slower than investors think. Plus, the high growth segment and health and protein segment are facing intense competition from many new age D2C brands. And fourth risk is execution risk. See, most Indian dairies are highly regional by nature because unlike an FMCG product where you can just ship boxes nationwide, milk is perishable. It needs to move from farm to plant to consumer within 24 to 48 hours. It means if you want to expand into a new state, you can't just open a distribution office. You need to build a procurement network, collection center, chilling plants, tankers, processing unit, cold storage, and last mile retail tie-ups. That's huge capital, and it takes years to become profitable in new region. Until then, your utilization rates stay low, your working capital increases, and your margin compress. I hope you got a fair idea of various risks involved in dairy sector business. So when you put all of this together, the opportunity, the structural tailwind, and the risk, India's dairy story becomes very clear. On one side, you have massive demand tailwind where India's per capita daily consumption is still 40 to 50% lower than global average. Urban incomes are rising, and now with GST reduction and value-added product penetration, organized players finally have a pricing power and scale opportunity. But on the other side, this is still a tough operating business. Margins are thin, milk procurement is volatile, and competition from cooperatives like Amul and Nandini keeps rising under pressure. That's why scale and cost leadership becomes everything here. If you look at listed space, Hatsun Agro is scale leader but facing margin pressure from high input cost. Dodla Dairy is executing beautifully with strong earning momentum and smart acquisition like Osam Dairy and expanding into new geography. Heritage Food is focusing on improving its VAP mix and operational efficiency. And Parag Milk Food is probably the most exciting on innovation with its avatar whey protein, cheese and high protein dairy snack, tapping into India's health and fitness wave. So yes, there will be volatility, milk prices, inflation, seasonality, but the structural story is looking very promising. India's dairy sector is no longer just about milk in a pouch. It's becoming a branded nutrition business. And the players who move fastest towards value-added, health-oriented products could create massive shareholder value in the coming years. If you ask my preference, from execution point of view, I like Dodla Dairy. And from innovation and value-added products point of view, I like Parag Milk. Now you tell me in the comment, what is your take on Indian dairy sector? And which is your preferred pick in this space? If you find this video useful, do share it within your circle. I'll see you in the next video. Till then, take care.